The following is a presentation of TFNN. Live at TFNN, Breakout Investing, with your host, Ken Shreve.
Hey, good afternoon, everyone. Happy Tuesday from Southern California. This is Ken Shreve with you. Another edition of Breakout Investing on TFNN. Let's talk about this market. If you want to do that, just give me a call, 877-927-6648, 877-927-6648. You can catch my show every Tuesday and Thursday on TFNN from 3 to 4 Eastern. Show's also available as a podcast on iTunes, so if you miss it, you can get it that way. And don't forget, you can listen to all TFNN programming on your smartphone. Just plug those earbuds in, type in tfnn.mobi in your smartphone browser, and you can listen to the stream that way as well whenever you want. And I'll be going over some charts, as I always do on my show. You can look at those charts live right along with me on Tiger TV on the homepage of TFNN.com. Channel 1, the show is carried live, and then it's archived on Channel 13. And you can also watch Tiger TV now on your handheld device, your Android device, iPhone, whatever you have. Let's take a look at the market, see where we're at here with about 50 minutes left to go in Tuesday's session. Looking at a chart of the S&P 500 right now in Tiger TV, where I have the 10-day, 20-day, and 50-day moving average for this index plotted. You can see that right here. Let me go ahead and give a refresh here. And we'll see that the S&P 500 right now is up a little more than a point to 1418. At this point, you can see the S&P 500 still holding above its 10-day moving average, support underneath that at 1386. Thereabouts, that's its 20-day moving average, and then the 50-day line at 1357. That's this line right here. So a pullback for the S&P 500 at this point to its 50-day moving average would only be about 4% from current levels. So perfectly, reasonable to expect that when selling does start to come into the market, and it will at some point, that a resting area for the S&P 500 could very well be its 50-day moving average. Now, after the big gain for the S&P 500 since December 19th, a 4% pullback might not seem like a whole lot, but at this point, I think the 50-day line could prove to be a pretty good support level for the bogey. And if it does eventually undercut that, again, when selling pressure starts to build in the market, I just don't see the selling getting much more extreme. If it does undercut, I don't think it's going to be a long bout of selling. So at this point, I think maybe a 5-6% pullback in the S&P 500 would be reasonable after the gains this index has seen. Let's take a look at the NASDAQ composite. It's outperforming again. That's where a lot of the leadership in the market is. It's very broad leadership right now. A lot of stocks out there working. The NASDAQ composite is up 11 points, close to 0.4% to 3133, and the NASDAQ composite is also trading above its 10-day, 20-day, and 50-day moving average. For the NASDAQ, it's going to need to correct about 6%, a little more than the S&P 500 to get down to its 50-day moving average, which is currently at 2936. So 20-day moving average at 3024 thereabouts could be near-term support. The 10-day could be a support as well. But when the market decides to consolidate meaningfully here, and I think the 50-day moving average for the S&P 500 and NASDAQ composite should be a near-term support level. If they get down that far, we'll see if buyers come in and offer support. So what do we know right now? Well, we know there are a lot of underinvested mutual fund managers out there. We know that there aren't any sellers around in this market. There haven't been any sellers around for quite some time. But the fact that there are still a lot of underinvested mutual fund managers out there as we head into the end of the first quarter, we're going to have that concept of window dressing going on. Perhaps some of it happened yesterday after Ben Bernanke made those market-friendly remarks about, again, interest rates staying low for an extended period of time. He thinks the unemployment rate is going to stay stubbornly high, and the Fed is going to, continue to be willing to be accommodative. So, stocks took that as a cue to rally broadly yesterday. Big day for all the major averages. NASDAQ volume picked up a little bit from Friday's level, but overall volume, nothing new there. Mostly disappointing during Monday's rally. Right now, we're tracking volume levels on the New York Stock Exchange and NASDAQ trading pretty close to Monday's levels. On Monday, we had about 734 million shares trade on the New York Stock Exchange. Heavier on the NASDAQ, which it always is. NASDAQ volume on Monday, also below average at 1.56 billion. There was a little bit of conviction behind the buying in the NASDAQ yesterday, but today, like I said, volume is tracking pretty close to what we saw yesterday in the market. So as the first quarter winds down, first quarter is going to be ending this Friday. Companies are going to be closing their books. We'll start to see a whole new round of earnings reports start to roll in towards the end of April. Pretty amazing, really. I think, earnings season just completely runs together at this point. I mean, we're still talking about earnings reports that came out last night, came out this morning. I mean, earnings season is just one big season at this point, but fact remains that first quarter ends Friday, and we're going to see first quarter earnings reports start to roll in April. And as usual, Alcoa will kick things off probably the third week in April. Thereabouts. So that's where we're at there. Talked about these underinvested fund managers as we approach the end of the quarter. Underinvested fund managers, they want to show people that they own some top performers during the first quarter. It's clearly been a momentum market. That's been good news for me and my Ultimate Growth Stocks model portfolio. I have a lot of strong performers in there. Not getting complacent by any means. I recognize that sell signals could arise in this market at any time, and when they do arise, I will not be afraid to take profits in certain names. Sometimes it might be partial profits, sometimes it might be full profits. The good news is I've got some pretty big cushions, despite the fact I've got a lot of new initiations in my Ultimate Growth Stocks model portfolio. I have some good cushions in stocks where I can, I don't have to immediately sell. I can be patient. If it means watching a 25% gain, go down to 15, 16, 17%, I'm content to do that so long as a holding is not showing meaningful signs of technical weakness. When current holdings start to, fall in heavy volume, which is possible, they start to break support. That's the time when I start to think about taking profits. But I'm in no hurry to sell things. In fact, yesterday someone asked me if I was selling into the strength yesterday, and I said, well, actually, I added to two positions and I initiated a new one. So I'm still keen on this market, and but that said, I'm ready to play defense at the drop of a hat. So I suspect between now and Friday, I don't think it's likely we're going to see meaningful selling pressure in this market. Now, what the month of April holds, who knows? What first quarter earnings season looks like, who knows? We'll just have to continue to monitor price and volume in the major averages. I always refer to myself, I'm not a bottoms up investor. I'm a top down investor. So price and volume and the S&P 500 and NASDAQ mainly dictate my buying and selling decisions. And the market, starting in late December, was when we got the buy signal, and a lot of new initiations in January and February, and basically, like I've been saying, just letting what I have work for now, and recognizing that sell signals could arise at any time. So can't be complacent, have to be ready to take action if necessary. In terms of base breakouts, there were quite a few yesterday. There have been several in recent weeks, but some decent ones yesterday. We'll go over those in a little bit, but right now I'm really interested in taking a look and see how these big leaders eventually pull back. I suspect that many are going to on a weekly chart, I suspect that many are going to find support at their 10-week moving averages. So let's pull up Apple, for example. We'll just look at a daily first. Take a look at Apple here and see the stock is outperforming again, up another $8.50 today, 1.4% to $615.55. Now we'll go over and take a look at the weekly chart for Apple and see that its 10-week moving average right now is at 531.21. So from 615 down to 531, that might seem like a harrowing decline, but when you look at the scope of what this stock has done since it broke out in January, over $426 a share, a pullback to the 10-week moving average is hardly anything. So I suspect that selling pressure is going to come into this market at some point, that you're going to see a name like Apple come down to its 10-week moving average. And then the question is, does it find support? I suspect it will. I suspect that there's still enough money on the sidelines, and the market sentiment is positive enough that we're still in the early stages of a move here. I think the market could consolidate, but like I said, I think the consolidation could be fairly quick, fairly short-lived, and during that consolidation, a name like Apple could easily come down to its 10-week moving average, which again is 531.21. Let's take a look at another weekly chart here. Some of these NASDAQ 100 names mainly. Let's take a look at Intuitive Surgical, ISRG. Pull up a weekly chart for this name, another strong performer, very extended. I've in recent shows just been talking about the number of extended stocks in the market. That makes me nervous. I mean, there's stocks that are clearly overbought here, but what do you hear all the time? Overbought conditions can stay that way for a while. So you want to be wary of buying a stock like Apple or Intuitive Surgical up at current price levels because they're extended. That's very risky. But ISRG is another example of a stock right now trading around $550 a share. Its 10-week moving average is at 511. So that's not as steep a pullback as Apple would need to go to get down to its 10-week moving average. So ISRG at 550, pull back to its 10-week moving average at 511 could be a good support level. And then let's take a look at another NASDAQ 100 name, and that would be Priceline, PCLN. And Priceline is a current holding in my Ultimate Growth Stocks model portfolio. Has been a big winner. Nice strong breakout here. Several weekly price gains in a row. Priceline, $732 a share now. Its 10-week moving average is down at 620. So you're talking 100-point, 110-point decline there. But a pullback to the 10-week moving average, perfectly normal. Considering the uptrend would still be intact if Priceline comes down that much. So we'll see how these leaders act when the market eventually pulls back. But thanks very much for tuning in, folks. We'll be right back. Breakout Investing on TFNN.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's just wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing breakout gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you seek to maximize your returns. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foresight Fund Services, LLC.
Hi, I'm Steve Rhodes, co-host of The Money Masters with Tom O'Brien, seen daily at TFNN.com, author of Mastering Probabilities, a daily investment and trading newsletter, and teacher of The Money Game. Studies show that 3 out of 5 people are afraid for their life in trading these markets, and the number one reason given is fear of loss. Look, fear stands for false evidence appearing real, and the money game proves it. Lesson number 1, don't risk more than 1% of your trading capital on any trade. Why, you ask? Because 35 trades in a row where you risk 50 cents and make $1 are all you need to double your trading capital, versus the 230 losing trades in a row you would need to bring your balance to $100. Let me teach you more about the money game risk-free for 30 days. Go to the homepage of TFNN.com and click on my name, Steve Rhodes, for your 30-day risk-free trial. You were born to be a money master, and I'll teach you how.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This segment is brought to you by Goldfields. For more information, just click the Goldfields banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Before we went to break, talking about some of these big leaders, particularly in the NASDAQ 100, names like Apple, Intuitive Surgical, Priceline. When the market does come back, I expect that all 3 of these stocks will at some point pay a visit to their 10-week moving averages, and I think there's a good chance that they will find support there. But if they don't find support and you are long one of these names, certainly a break below a support level like the 10-week moving average would be reason to at least take some partial profits. All right, let's take a look at shares of Tango, a recent new issue. A lot of these new issues continue to perform very well in this market. Makes me optimistic here. Tango a bit disappointing today. The stock hit an intraday high of $20.05. It looked like it was going to try to break out over 1990. That would be its intraday high right here, swing point of 1990. It tried to early in the session, but stock is reversing lower. It's now down 3 cents to $19.15. Hasn't broken down by any means, but disappointing price action today. You can see it is still a stock that is under a fair amount of accumulation. Some sellers in the stock of late, though. Again, looks like a failed breakout attempt for Tango. This is a company that went public in late July last year at $10 a share. Again, currently trading around $19.15. So it has been a strong price performer in the market thanks to strong fundamentals, strong technicals. Tango makes on-demand software that basically helps firms manage the entire life cycle of a product from beginning to end. Let's also take a look at Click Technologies, QLIK. Looks like better price performance for this stock. This is not a recent new issue, but it is an interesting small cap name that is enjoying a technical breakout today. Shares of Click, this is ticker QLIK on the NASDAQ, up 2.7% today to 32.61. Click took out a swing point of 32. Remember, a key rule I follow when buying technical breakouts, and I am not long this stock at this point, but a key rule to buying technical breakouts is that you want to make sure volume is there, and you do have very heavy volume in Click, but you don't want to chase it when it moves more than 4 to 5% past a swing point. So Click's swing point is 32. It is at 32.61, so still within range here. Click is high quality tech name. And turning to crude oil today, up for the third straight session. Oil for May delivery rose 30 cents, or 0.3% to 107.33 a barrel. That's at the New York Mercantile Exchange. And then gold got close to $1,700 an ounce. Gold for April delivery fell 70 cents to settle at $1,684.90 an ounce. It traded as high as $16.93. So let's take a look at gold here. GLD, Spider Gold Trust. This is the ETF that trades 1/10 the price of an ounce of gold bullion. It hit an intraday high today of 164.89, but now is trading near its session low, down $1.18, 0.7% to 163.22. Usually take a look at the GLD every show when we are quoting where gold bullion is trading, and right now the GLD is not looking good. Of course, gold had a big day yesterday when Ben Bernanke again reminded the market that he is ready to keep interest rates low for a long time. Still not that optimistic on the economy. Encouraged by recent job growth, but thinks that unemployment is going to stay stubbornly high, and for that reason, the Fed can't rule out additional quantitative easing. So that was, again, the reason the market rallied big yesterday, and we did see a big rally in gold, a gap up yesterday and also a gap up Friday, but the GLD is still troubled. Economic data earlier today, we had home prices in the United States fall for the 5th month in a row to their lowest level since early 2003. That's according to the S&P Case-Shiller 20-city composite index. Only Miami, Phoenix, and Washington, D.C. were the cities that posted price increases. You'd think that'd be bad news for home builders, but not necessarily, because earnings from Lennar sparked a big rally in home builders today. Let's check in on Lennar. We'll see that this stock is off its highs, but still up 4% to $27.47. It hit an intraday high of $28.28. We'll talk about Lennar's numbers when we come back, because it was a very strong quarter. Stock picker's market in the home building sector. I also like DHI, but we'll talk about Lennar when we come back. You're listening to Breakout Investing on TFNN.
In just December of last year, the price of gold was down over 10%. In today's highly volatile gold market, you need someone in your corner that understands the complex relationships that exist within the price of gold, as well as within a variety of gold equities. Whether it's the South African gold miners and knowing how the Rand-dollar relationship will affect their bottom line, or understanding how John Paulson's $5 billion trade in the GLD can move the market, Tom O'Brien gives you the direction you need to become become a better trader each week in his newsletter, The Gold Report. With over 20 individual equities covered and almost another 20 on the potential watch list each week, in addition to covering the XAU, HUI, GLD, and dollar, The Gold Report is a great source for any trader that is looking to be diversified in today's volatile gold market. For your 30-day free trial to Tom O'Brien's Gold Report, log on to TFNN.com today. Don't miss out on this great offer. Act now.
Hi, folks. This is Tom O'Brien. If you want to get great trade setups in equity as well as the option market, come over to TFNN.com and test drive my daily newsletter, Market Insights, for 2 weeks absolutely free. Each trade setup comes with a profit projection as well as stop placement. Included in Market Insights is a Twitter alert service. This allows you to take advantage of intraday setups. Volatility is back in the markets. What does that mean to you? To me, it spells short-term opportunity each and every day. The days of trending up on lighter volume are gone. We have come off the highs with volume across the globe. Don't get caught in a complacency trap. Many of the indices have given back 2 months of trading in 1 week. We have a trader's market. You can take advantage of this trader's market by test driving my daily newsletter, Market Insights, free for 2 weeks. Market Insights will give you the edge you're looking for in the markets. Go to TFNN.com, under newsletter, hit the Market Insight tab for your 2-week free test drive right here, right now.
What type of investor are you? Conservative, moderate, or aggressive? No matter your investor personality, your overall portfolio should reflect your financial goals, time horizon, and your risk tolerance. Help ensure your portfolio is appropriately invested with an asset allocation plan from Morgan Stanley Smith Barney. Simply picking the right stocks is not enough. Research has shown that choosing the right proportion of stocks, bonds, and cash is essential to the success of your long-term investments. Morgan Stanley Smith Barney believes that a carefully selected portfolio can lower volatility and increase investment return potential. Find out about what asset allocation and a Morgan Stanley Smith Barney financial advisor can do for you. Call Angela O'Brien, First Vice President and Certified Financial Planner of the Clearwater, Florida branch at 727-441-6108 today to discuss your personal financial needs. Asset allocation does not assure a profit or protect against loss in declining financial markets. Investments and services are offered through Morgan Stanley Smith Barney, LLC. Member SIPC.
Are you looking for a precision edge in the market? Something that can stack the odds in your favor? Then look into Larry Pesavento's new trading newsletter, Patterns, Profits, and Peace of Mind. In each weekly issue, Larry explains what's going to happen in the markets based on the pattern he sees developing and gives you actionable trade ideas based on those patterns. Plus, you'll get his detailed analysis on a variety of markets and sectors, including stocks, treasury bonds, the gold market, oil, the dollar, the forex market, and more. And you'll get the Technical Corner segment, which is a short but powerful weekly training session on trading. You'll get access to all the patterns Larry is seeing in the markets, plus the Astro Harmonics and powerful Bradley stock market model that Larry utilizes for less than $5 a day. An extremely potent combination that will give you just the edge you've been looking for. Try Patterns, Profits, and Peace of Mind absolutely free for 2 weeks. Go to TFNN.com and click on the free trial link at the top of the page. That's an $85 value, yours free when you register right now. Get Larry's Patterns, Profits, and Peace of Mind and get the edge you've been looking for.
This segment is brought to you by Direction Shares. To learn more about technical tools for the sophisticated active investor, hit the Direction Shares banner on the front page of TFNN.com.
Welcome back, folks, to Breakout Investing on TFNN. Ken Shreve with you from beautiful Southern California. Thanks very much for tuning in. 877-927-6648. That's the number to use if you want to give me a call, talk about this market. Before we went to break, talking about strong earnings from Lennar, L-E-N, a high-quality home builder, no doubt about it. Its latest earnings report proved that. First quarter earnings of 8 cents a share. That reversed a year-ago loss of 5 cents. Sales, how about this top-line growth? Sales up 30% from a year ago to $724.9 million. So great growth on the top line, most impressive. The Miami-based home builder said its first quarter operating margin was the strongest since 2006. So nice earnings from Lennar. I'm currently long DHI, DR Horton, for my Ultimate Growth Stocks model portfolio stock that has made a very nice run in recent weeks. Let's take a look at D.R. Horton. Stock is up 2.8% today to $15.86. And then let's take a look at that ETF. Sometimes we look at ITB when we're talking about the housing market. This is the iShares Dow Jones U.S. Home Construction Index Fund. Trading in the middle of its range today. It is up 35 cents, 2.4% to $15.10. ITB, Lennar is the top holding in this ETF. And D.R. Horton is the second largest holding, and NVR is another top weighting for the ITB. So home builders continue to be a good pocket of leadership in this market. Another piece of economic data earlier today, the latest reading on consumer confidence from the Conference Board. It was mostly in line with expectations. It fell to 70.2 from an upwardly revised 71.6 in February. You had Treasuries rise on the news. That sent yields lower. Yield on the 30-year bond right now about 3.3%. 10-year 2.19, and the 2-year note 0.33. Coming up tomorrow, we've got the latest look at durable goods orders for February. Thursday, weekly jobless claims, and the always important third revision to fourth quarter gross domestic product. That's due Thursday. I think they're looking for 3% growth, which is unchanged from the prior estimate. So we'll see what fourth quarter GDP data look like on Thursday. And then Friday, we've got personal income and spending, Chicago Purchasing Managers Index, and the final reading for March from the Michigan Consumer Sentiment reading. Taking a look at earnings today, pretty quiet. Just take a look and see what Walgreens is up to here, or Walgreen Company, I should say. And stock is having a good day, up 1.25% to $34.80. You see it is trading near its session low after early strength. Not a stock that's typical of the type of stock I target for my Ultimate Growth Stocks model portfolio, but it is a liquid, widely held large cap name. Earnings down 5% from a year ago to 78 cents a share. Sales up 1% to $18.65 billion. So Walgreens having a decent day, even though it is trading near its session low. Let's take a look at shares of NCR. We'll start with the daily chart here. NCR trades as NCR on the New York Stock Exchange. Interesting technical setup here. The stock is up 1.7% today to 2178, poised to take out the 2212 price level. Let's swing over and take a look at a weekly chart for NCR. And here it is right here. And we'll look at the weekly chart here, and what I've done is I put an arrow where that swing point is. But this is what's known as a bullish cup with handle pattern. Typically, you like to see these in the early stages of a market rally. Good technical setup here. A company that shows accelerating earnings growth in recent quarters. So fundamentals are pretty solid at this company as well. Very liquid. Average daily volume of about 1.4 million shares, and it's a mid-cap stock with a market cap of $3.4 billion. So interesting technical setup here. A good one to watch to see if it can make a heavy volume move over 2212. Volume, pretty good in the stock today. Let's swing back over to the daily chart for NCR. And you can see the big volume bar down here. Heavy volume. Stock is, market's bleeding a little bit into the close here, so probably just getting pulled down with the broad market, but still a stock with potential here. Let's move on, take a look at shares of Baidu, which have come back to life in a big way. Baidu is working on a 5-session winning streak here. After hitting a high today of 154.15, the stock is now trading at 151.32, up 52 cents or 0.3%, but a nice breakout for Baidu over 142.49. That would be its swing point set here in February. Baidu still a lot of big fans of Baidu. I mean, China is not an easy play to, is not an easy area to play individual stocks, but you really have to look at Baidu right now as, the institutional quality stock in China. There's a lot of publicly traded companies on the New York Stock Exchange and NASDAQ that are headquartered in China. Some have a lot of potential, but they're very speculative. Baidu is obviously speculative, but it does have a pretty good track record of growth and bright growth prospects as well. 2012 earnings this year, they're expected to do $4.60 a share. That would be up 52% from 2011. Next year, 2013, they're expected to earn $6.47, which would be up 41%. So high multiple stock here, but high multiple warranted because growth prospects remain pretty strong for the China-based provider of internet search services. Let's move on and take a look at shares of Polaris PII. This is a company that very interesting, good fundamentals here as well. They make all-terrain recreational vehicles, utility vehicles. They also make snowmobiles, but shares of PII, Polaris Industries, very bullish here. Nice breakout. Monday, stock followed through nicely during yesterday's big market rally. It's only down 3 cents today, holding on to its gains nicely. So good technical structure here. Another solid breakout for Polaris Industries. Let's go ahead and take a look at a weekly chart for Polaris as well and see what it looks like. Here's Polaris right here. And what we have here is you'll see a breakout from what is called a base-on-base pattern. So I underlined the first consolidation right here. So it based, broke out, didn't make much headway, got caught in a little market downdraft here, but then it formed another base right here. Approached its, actually set a new 52-week high, started moving sideways, formed a little handle area, just recently broke out over a swing point of $70.31. So Polaris acting very well in this market. And move on, let's take a look at SolarWinds. Some of these stocks that really participated nicely during yesterday's strong market rally. Shares of SolarWinds under a little bit of pressure today. After a big move yesterday, you got a technical breakout in heavy volume on Monday for SolarWinds. Stock right now is down 80 cents, 1.9% to $40.30. So typically the day after a breakout, you'd like to see some follow-through. You didn't get it with SolarWinds. This is a company that makes network management software, highly regarded company with good earnings and sales growth, good growth prospects, a lot of positive qualities, but no follow-through for the stock today. A bit disappointing. Move on. Let's take a look at shares of Buffalo Wild Wings. Interesting story, but the analysts just keep going back and forth on this stock. I am long the stock, and this is another name that I have a pretty good cushion in, so I can afford to sit out some selling here and not really worry about pulling the trigger too quickly. But you've got analysts upgrading the stock one day and then downgrading the stock the next. It is down $2 today, 2.1% to $92.42 after a very bullish breakout yesterday. Big gain and higher volume. Nice technical breakout. But the stock is near its session low today, again trading around 92.42. Deutsche Bank came out with a note earlier today. They basically raised their price target to $100 a share, but they downgraded the stock to hold, I believe, based on valuation. And a lot of people have a hard time with momentum stocks because they think automatically, just because it sells at a high multiple or the stock gets a premium to other peers in its industry group, they think the stock is too expensive. They think that the fundamentals don't justify the price performance. But people forget that Buffalo Wild Wings, they're not even in California yet. I mean, this is a company that is still in the early stages of growth. They're growing annual earnings at a 20% clip. Of course it's going to have a high multiple. So people talking about a high valuation, I'm not sure they're looking at the balance sheet closely enough. But anyway, that's pretty typical with momentum stocks. They tend not to get a whole lot of respect. People see huge price performance, but they are quick to look past the fact that in many cases there's a bona fide fundamental story of growth taking place, and I think that's the case with Buffalo Wild Wings. Let's move on. Take a look at shares of UBNT. This is another new issue here. Ubiquity Networks, UBNT on the Nasdaq. Bullish breakout recently over 28.97. In fact, it happened Friday. The stock followed through bullishly on Monday. Stock's under a little bit of pressure today, but not much. Down 32 cents to 32.43. Ubiquity Networks basically makes wireless networking products. And this is a company that also had its IPO last year, went public at $15 a share in mid-October last year. So very important to pay attention to new issues, especially those that really have a compelling growth story. A lot of positive chatter about Ubiquity Networks recently, so interesting company. Moving on, taking a look at FEI Company. Trades under the ticker FEIC on the Nasdaq. Strong performer here as well. Stock is acting well today, up 19 cents, 0.4% to 49.22. FEI Company makes basically scientific instruments for nanoscale applications in industries like material science, life sciences, semiconductors, data storage, things like that. But FEI had a nice breakout yesterday, nice technical breakout. The one thing, and I almost came close to buying this one, but the one thing, when you start looking at the balance sheet and what the company does and growth prospects, I mean, fundamentals are pretty solid here, but I noticed that when the company reported fourth quarter earnings, sales were only up 14% from a year ago to $213 million, and that's decelerating growth from 34% growth in the third quarter, and that 34% growth was decelerating growth from 45% in the second quarter. So typically when I'm evaluating a company for inclusion in my Ultimate Growth Stocks model portfolio, it's one thing if it has a bullish chart and it's showing signs of accumulation and it looks like fund managers are in there accumulating the stock, but I need to see a compelling fundamental story as well. FEI is not bad by any means, don't get me wrong, but the decelerating sales growth in recent quarters is kind of a deal breaker for me, and that's a reason why I chose not to buy the stock yesterday, even though fundamentally and technically it looks okay. It's just that decelerating sales growth that's hard for me to get by. Let's take a look at shares of LinkedIn, also outperforming nicely today, although it is down near its session low. Stock is still up 1.8% to 103.17. Nice breakout for LinkedIn recently. Over $96 a share. That was its intraday high set on February 21st. 96.21 set on this day right here. But lots of accumulation going on in LinkedIn as well. Another new issue came public last year in May, I believe, at $45 a share. So looks like the market is bleeding a little bit as we head into the close. Let me just get a quick check on the major averages here. We're seeing a lot of stocks trading down near session lows right now. Not too bad, though. The Dow is down 35.5 points to 13,206. NASDAQ was not that long ago up about 0.4%. Now it's just down slightly, down 1 point to 3121, and the S&P 500 down 3.6 points, close to 4 points to 1412. So some stocks trading near session lows after early strength. LinkedIn is one of them, but just getting pulled lower during this little pullback in the market here. Let's take a look at shares of Dollar General, DG. Dollar retailer, they've been doing very well of late. Stock under a lot of pressure today. This is an example. If I owned a growth name like Dollar General, and say I bought it around $43 a share when it broke out here in March. You got what looks like some pretty serious institutional selling in the stock today. It's still holding above its 10-day moving average at 45.53, but heavy volume, downside. Stock is down 3.2%. Pretty bearish price action today. So if you have profits, maybe not a bad time to take some money off the table. We'll be right back, folks.
In the world of financial markets, there's a new player in town with an exciting new way to trade the markets. Nadex now offers binary options as well as bull spreads in a wide range of indices along with commodity and forex markets. With as little as $100, you can gain access to a new way to trade global financial markets while guaranteeing that your risk will always be capped. Nadex allows you to multiply your trading opportunities in ways never imagined before and access markets you once thought were out of reach. With short-term trading opportunities available, including binary options expiring each hour the market is open, Nadex allows you to take advantage of a variety of market conditions regardless of volatility or market direction. Now is the time to take advantage of this exciting new market. Don't let this trading opportunity pass you by. Open your account today by clicking on the Nadex banner on the front page of TFNN.com. Nadex, a better way to trade.
TFNN is proud to bring you the cutting edge of investment newsletters. Ken Shreve's Ultimate Growth Stocks. Ken is a top-down investor who lets price and volume in the major stock indices tell him when to be in the market and when to be out. By using his unique blend of fundamental and technical analysis, Ken will protect your hard-earned capital while realizing Breakout's gains. Go to TFNN.com today, click Investment Newsletters, and get Ken Shreve's Ultimate Growth Stocks free for 2 weeks.
Hi folks, turns out my best student became my best teacher. Steve Rhodes absolutely raised my standards, and I'll guarantee he'll raise yours.
Thanks, Tom. What I've learned is that if you want more, you must become more. And that transformation, folks, that occurs the moment you decide to become a master. Now, the quickest way to mastery is through immersion. And for 2 solid days in Denver, Boston, and Tampa, I'll create a new standard of wealth for those few trader investors who have a burning desire to succeed. At my Master Trader course, I'll teach you how to create the ultimate money machine. These are the best kept secrets in the business. Roadblocks, folks. Dabblers give up when they first appear. Stressors last just a little bit longer, but masters expect roadblocks and achieve extraordinary results when they bust right through them. I have all the benefit of knowing the type of wealth creation that I can generate for you. You don't. That's why I'm making this unconditional money-back guarantee. If for any reason you're not satisfied with my Master Trader course, I'll refund every penny. That's right. I take all the risk and you get all the benefit. Go to the homepage at TFNN.com and sign up today.
Put the power of the Chapman Wave methodology to work for you. No matter what market you trade, what time frame you trade in, or your trading style, the Opening Call, Basil Chapman's daily market newsletter, is bursting with the information and trades you need to become a more successful trader.
I've been using Basil Chapman's Chapman Wave methodology for several years now. His Chapman Wave can be used for any time period for not only equities, but futures, currencies, commodities. I've been also a subscriber of his Opening Call, which I find an invaluable tool to help me analyze the potential of the market each day. He gives you opportunities to go short and long. It includes recommendations on stocks. I strongly recommend people using the Chapman Wave, and I very, very strongly support the use of his Opening Call.
To find out more about Basil Chapman and his Chapman Wave methodology, and to get your 2-week free trial of the Opening Call, a $64 value, visit TFNN.com today.
Here's what people are saying about Tiger TV.
Let's go to John in Tampa. Hey, John, what's going on?
Hi, Tom. How are you, sir?
I'm doing great. You having a good day out there?
A wonderful day. I love your Tiger TV. I watch it every day. I'm like a kid in a candy store.
Oh, man, I appreciate you out there watching it. How long have you been watching the Tiger TV?
I'm watching almost a month now, and it's wonderful.
It's pretty cool, isn't it?
Oh, yes, it's cool. You see the charts and everything. Thanks so much for the hard work.
Tiger TV, a great news service from TFNN.com. Catch Tom O'Brien, founder and CEO of TFNN, professional trader and educator. Also a special guest on CNBC, analyzing the commodity markets. Tom will bisect and dissect the markets. The Tom O'Brien Show, next on TFNN.
Welcome back, folks, to Breakout Investing on TFNN. 5 minutes left to go in Tuesday's session. Let's pull up a chart of the NASDAQ again here in Tiger TV. And the NASDAQ traded in a very, very tight range today. It's now unchanged at 31.22. Hit an intraday high of 31.34, a low of 31.20. So only about a 14-point trading range. for the day. So very tight trading in the NASDAQ. It is near a session low, again, at 31.22 right now. And let's check in on the S&P 500. And that is also near its session low. Also trading in a tight range today. S&P 500 down 3.6 points, close to 4 points to 1412. So, bottom line about this market, yes, there are a lot of extended stocks out there. I've been talking about that in recent weeks. You don't want to buy the extended names out there, names like Apple. There isn't a day that goes by where I don't get an email from somebody saying, are we really supposed to sit on our hands, or if we want to buy Apple, we can't buy it at $600 a share? And bottom line was that the breakout in Apple was over 426, so it quickly became extended in price, and now it's even more extended. So market's going to pull back at some point, probably give you a better chance to into Apple. You just don't want to buy extended stocks. They are a dime a dozen in the market right now. Went over some charts earlier today, some stocks that possibly still within buying range, but the bottom line right now is that the market has been running since December 19th thereabouts. So leaders started coming out weeks and weeks ago, and at this point, again, when it comes to my Ultimate Growth Stocks model portfolio, I have a lot of names in there, probably more than what I want, but in a portfolio of 14 stocks, I'm eventually going to identify the biggest leaders in that portfolio, get rid of the dead weight, and start funneling into money into stocks that I think have the best chance of being a big leader. So a model portfolio of 14 stocks could eventually get down to 7, 8, 9 stocks, something like that. But so we'll see how things play out in coming days. I mentioned the fact that the NASDAQ right now, only a 6% pullback at this point would bring it down to its 50-day moving average. You're looking at a 4% pullback for the S&P 500 to come down, to its 50-day line. Perfectly reasonable. So we've got the end of the first quarter coming up Friday. Companies will be closing their books. We'll see a bunch of earnings reports start to come in mid to late April. That will continue in May. Hopefully the news will continue to be good. The economic data, by and large, even though Ben Bernanke is still a bit cautious, a bit skeptical on this economy, thinks that more quantitative easing, whether it's bond buying or something else, may be needed later in the year. The market has been acting well, and there have been some limited signs of distribution in the market, but by and large, leading stocks are really going to have to crack big from here, to make me concerned. One day of selling is certainly not going to be enough for me to, start selling things in the model portfolio. So anyway, when it comes to Ultimate Growth Stocks, if you want to get a 30-day free trial to Ultimate Growth Stocks, it's a weekly newsletter updated every Tuesday. I sent out my weekly update earlier today, and if you want to get a 30-day free trial, you can go to kenshreve.com. That takes you right over to tfnn.com to my information page, and you can get a trial that way. I update every Tuesday. I send out email, buy, and sell alerts in between. Coming up after the close, we've got a few earnings reports after the close. Paychex and Red Hat. No, that's not true. After the close, PVH and Cinex. Red Hat later in the week. Thanks for listening, folks. I'll talk to you on Thursday.